Welcome to Financial Issues, where we join reality with truth, helping you make the most of your money by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
Good morning, folks. Welcome to Financial Issues. We're on the back end of the week here, and it's great to be here with each of you today. Seth Udinsky, Sam Case, the Studio A team, rocking and rolling. Sam, ready to have some fun again, brother. Looking forward to it. Let's do it.
Of course. It's Thursday. It's like the weekend eve.
Almost here, baby. Almost here. Hey, we've got a busy show, folks. Treasury Secretary Scott Bessent is very optimistic about rate cuts. We'll see what this morning's PPI numbers potentially do to that. We'll get that in a second. But speaking of optimism, recession fears also are going down among many corporate executives. Shortly, we'll get your questions and comments. Make sure to say hello in the chat or on social media, wherever you're watching or listening. If you're on the radio, welcome to you as well. Also, our friend Mark Minnella is going to join us later in the show to discuss several issues, including his thoughts and wisdom on some of the different BRI screening tools at our disposal. I know this is a question that some of you have posed, and so we're going to tackle that with Mark later. I'm excited for that. We'll talk about some other things with Mark as well. The big news this morning, folks, Producer Price Index came out this morning. Just a reminder, if you're new to the show, if you don't really know much about finances, the PPI number is the monthly measure of wholesale inflation, changes in selling prices by domestic producers. That price rose almost 1% in July. It was 0.9%. It's higher than expected, and it was a 0.2% increase for the month as well, for the previous month. Excluding food and energy, so that's core PPI, the index came in at 0.6%. Sam, it's interesting because it seems like this could be exactly what Lord Father Jerome Powell needs as an excuse to not cut interest rates.
Well, it's unfortunate, too, because it comes off of those good CPI numbers, which was getting the market so excited, thinking, yes, now's the time to cut rates. Now, maybe not so much, at least in the eyes of the Fed.
Yeah. Sam, if you could keep an eye on this for me. Yesterday, I believe the numbers were, the markets were pricing in around a 94% chance that there would be a rate cut in September. I'd love to see what that number is once the markets have digested this PPI news here.
Sure.
So that's what it's looking like, folks. No reason to panic. That's the way things go. But that's what we're seeing there. I'm wondering if Jerome Powell is breathing a sigh of relief seeing this. We'll have to see. But at any rate, interesting stuff this morning.
And he has some backup, too, because we had a Fed president today, or it might have been yesterday, saying, yes, rates are exactly where we want them for right now. They're restrictive, but not too restrictive. So he does have some guys in his corner that might support him at the next meeting.
Absolutely. We'll have to see how that goes. That meeting in September, I believe, middle of the month. So we're about a month out from that next Fed meeting. Speaking of earnings, we haven't talked much about earnings this week, partially because it hasn't really been all that big of a week. Not many well-known companies reporting, and their performances are pretty so-so. We had Cisco reporting. Shares fell, the fourth quarter shares. They only barely beat expectations. You might be wondering why Cisco is reporting fourth quarter or earnings while most others are doing second quarter earnings reportings. Some companies follow a different fiscal year. They'll go a July to June fiscal year. They'll go a October to September fiscal year. So their quarter numbers will be different, even though it's the same quarter.
So you're just saying they're wrong. Their calendar's just wrong.
Exactly. And that's we also have a non-December to or January to December fiscal year. Our fiscal year is October to September.
Okay, so we can't judge.
That's exactly right. That's right. Meanwhile, Deere had a third quarter report. That was mixed. Shares fell 7% yesterday also. Really the big news with earnings, really one of the last big ones to report is going to be NVIDIA. I believe that's next week, Sam, or maybe the following week.
I think it's the 24th.
Okay. So we'll have to keep an eye on that one, folks, for sure. We'll take a look now at the markets. There was not a whole lot to digest yesterday. The markets began the day with relative calm. Indices were mixed. The Dow was the winner. The S&P and the NASDAQ were around the flat line. All three indices did finish the day in positive territory, which meant another record finish for the S&P and the NASDAQ. Wednesday's closing bell saw the Dow finishing up 1% positive. The S&P 500 was up about 1/3% positive. The NASDAQ about 1/8% positive. Before the PPI number broke this morning, the pre-markets were relatively flat. As of right now, they are, let's see if I can refresh my screen here real quickly.
While you're doing that, Seth, I do have a quick correction.
Yes,
NVIDIA is announcing earnings on the 27th.
Got it. So that's not going to be for another 2 weeks then. Okay. Cool. The pre-markets this morning, relatively down, about 1/3% down. Each of them are. The PPI numbers did see somewhat of a spike in the U.S. 10-year Treasury yield, now up around 4.25%. A little bit of a spike there. So that's what we're looking like there this morning. All right, Sam, let's move to something that's, I think, a little more optimistic here. We are seeing fears of recession dropping, especially concerning, I think, the opinions of those who we should pay attention to. That is executives for companies. What do you have to tell us there, Sam?
Yeah, that's right. So yesterday we were talking about optimism among small businesses, and they're feeling pretty good. There's some hesitation, but overall they think that things are going to be okay. And apparently that's also the case with major CEOs as well. I got this from Bloomberg. They say executives for companies listed on the S&P 500 have so far mentioned an economic contraction fewer than 300 times during Q2 earnings calls, near the lowest in data compiled by Bloomberg going back to 2001. So that is pretty significant. That's also a major drop off from last quarter when it was something like 850 companies and CEOs were mentioning the dreaded R word. So what do you make of that, Seth?
You know, I think it's interesting, Sam. What we're seeing here, and this, by the way, this does have a lot to do with some of what Shannon talked about on the yesterday's partner alert. What am I saying here? It's the commentary page. Thank you.
Technical term, yeah.
Technical term,
which is
exactly
now posted.
Right. That's exactly right. So make sure to check that out there, folks. I wouldn't be surprised, Sam, if the term ghost recession was not even on anyone's consciousness until the Biden administration shoehorned it into the national consciousness when we did see a by-the-book recession in 2022, but then all of a sudden it's not that. My understanding is I think these executives get it, that the dreaded R word is always going to be thrown around, but until we actually see one for real, we can't panic. And even if we do see one, that is not necessarily reason to panic either. Does that make sense?
No, yeah, it definitely does. Yeah. Because sometimes it's a correction.
Absolutely.
Yeah.
Absolutely.
By the way, the betting markets, not that they're always accurate, but people are putting money where their mouth is. So Polymarket predicts the odds of recession this year are around 15%. That's down from 66% in May. There's a couple reasons for this. One is, of course, the booming stock market. We keep hitting those record highs. Also, the increased potential for interest rates cuts, which, maybe is now a little bit more iffy, but I think the likelihood of at least some rate cuts this year is very high, as well as strong earnings reports and the general realization that while tariffs might cause some bumps along the road, it's not going to be the end of the world.
Yeah. That's good stuff. Thanks for bringing that up to our attention there, Sam. It's good to see some optimism there, especially, like you said, along with what we talked about yesterday with the business numbers. Let me give some quick hits here, Sam. A couple things that I want to draw our attention to. It's looking like mayoral candidate Zoran Mamdani is in fact leading the New York City mayoral race by 19 points. Folks, you may be wondering why we've mentioned several times now a mayoral race. The reason this is a big deal, number one, it's the largest city in the country.
It's an economic powerhouse.
It's an economic powerhouse.
The economic heart of the country.
Exactly. Very, very important there. Number two, it's what this guy stands for, and it's the precedent that it sets. If we have someone of his character, which I believe is very low, and of his moral standing, which I believe is even lower, at the helm in America's largest city, that could not bode well for us.
Plus, the rise of socialism is just very disturbing. Republicans are not going to be in power forever, so we want to be aware, what is the other side thinking? What are they planning to do when they get in power? I saw a very disturbing poll from earlier this week talking about who are the most admired people in the country right now. Number one, of course, is Pope Leo. He's not been around that long. He's also a religious figure, so it's easy to like him. But number two, guess who it is, Seth?
Is it Mamdani?
No, it's Bernie Sanders. Yes, number two is Bernie Sanders. I think number 5 was AOC.
Wow.
She might have been number 4, but it's really bad.
It really is. And the reason why it's bad, of course, is because these people have successfully deceived so many. That's really what this is. See, the lie of socialism, folks, is a deception to believe that if you trust in the all-powerful government, you will achieve utopia, perfect existence. We're not going to get perfect existence until we get the perfect culmination of the government resting upon the shoulders of the wonderful Counselor, Mighty God, Everlasting Father, Prince of Peace. Jesus is the answer for that, not some socialist utopia. That's really disturbing, man. It really is. So I would urge you folks, listen, you might not live in New York City. You might not even like New York City that much, but if you think about it, pray against the election of this guy into the New York City mayoral race, because we certainly cannot have that in this country. Elsewhere, Sam, this was interesting. You shared this with me yesterday. The U.S. national debt does continue to rise. It's kind of been, we haven't really looked at it much, but it's up to $37 trillion now. That's also not exactly a good thing, and I can't help but wonder how a business would get away with debt like that. No business could even match $37 trillion in debt, but just, think about this with me for a second. If you had that much debt and you're not bringing in enough money to cover it, I can't imagine that business would last very long, would it?
I know, and it's also depressing, too, because everything the Trump administration is trying to do, reduce the debt, I applaud it, but in the end, it's going to just be a drop in the bucket of this sea of debt we're just drowning in.
Yeah, I do really believe, Sam, that if we're going to address this, the solution is a total overhaul where we need people in the United States government who are willing to stop the crazy spending. It has to stop. It really has to stop. A lot of other things happening this morning, folks. We'll get to some of them on the other side of the break here. Grateful for each of you today. Hope you'll say hello on the chat. We got more financial issues after this.
Navigating through investment options can be challenging, especially when you're determined to uphold your God-given values. Every dollar you invest is a vote for the world that you want to live in. Let your values guide your investment decisions and help to shape the culture in which we live. Become a beacon of light and pave the way with biblically responsible investing. Timothy Plan, where faith and finance collide. Before investing, carefully consider the fund's investment objectives, risks, charges, and expenses of the investment company. This and other important information can be found in the fund's prospectus. To obtain a copy, visit timothyplan.com or call 800-846-7526. Read each prospectus carefully before investing. Investing involves risk, including the potential loss of principal.
Do you love financial issues? Did you know you can catch the show anytime at financialissues.org? But that's not all. Financial Issues is also available on multiple platforms, including Spotify, Apple Podcast, and Rumble. You can listen on your favorite device wherever and whenever it's convenient for you. Whether you're at home sipping coffee, commuting to work, or enjoying a workout, Financial Issues is just a click away. Don't miss a moment. Stay connected to Financial Issues and make the most of your money by honoring God with your investments.
My baby was like this big, and I saw his heart beating on the screen. I went from, I don't want this baby, to talking to my child on the screen. That sonogram changed my life. I went from just Candace to Mom.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
Securities offered through G.A. Reppel & Company, a registered broker-dealer and investment advisor, member FINRA and SIPC. Opinions expressed by Shanna are hers alone and are for informational purposes only, and do not necessarily represent those of G.A. Reppel or the outlet on which you are listening. You should consider how the information applies to your situation prior to personally implementing it, and consult any financial professional you work with to make sure it's applicable to your financial plan.
Welcome back, folks. Financial Issues here. A couple of quick hitters here to get for you. Trump is considering apparently 11 candidates for the Fed chair, including David Zervos and Rick Reeder. That's according to sources. So we've seen several. Also, weekly mortgage refinancing demand shot 23% higher yesterday. Riskier loans seem to be making a comeback. And coffee and tea prices are also ramping up due to tariffs. That is worrying retailers and importers. Folks, did want to give you a reminder. One of you, I believe Stephen, had asked about this or mentioned it in the chat there. Looking forward to the next conference call. I'm glad you are, Stephen. If you read the commentary, you know that we do have a conference call coming up a week from today, folks. So this is your first announcement for it. You have not received the alert for it yet. That's okay, but it will be a week from today. You can mark your calendars for August 21st, 12 p.m. Central Time, 1 p.m. Eastern Time. Again, 12 p.m. Central, 1 p.m. Eastern, a week from today, August 21st. So make sure that you make provisions to join us for that, or make provisions to listen afterwards if you can't join us for it. By the way, Shannon's going to be back tomorrow. I'm really looking forward to it, folks. You're going to want to get your calls queued up early in the call queue. 9:05 Eastern time is the best time to call, so make sure that you do that. And speaking of tomorrow, we will be in Daniel 7:26 through 28 for Bible study. We've been having a juicy conversation, interesting conversation.
You used the exact word I was going to use, Seth. It's juicy.
It is very juicy. Sometimes I've wondered, why in the world did I pick Daniel? But here we are, and there's no getting out of it now.
It seems when you read Daniel, even Daniel is wondering, why on earth am I writing this? I'm so overwhelmed.
Right. Even by the end, in verse 28, we're going to talk about this tomorrow, Daniel is like tired and he's like, what did I just see? And his thoughts troubled him, and then he doesn't tell anyone. It's ridiculous. He does write it down for several billion people throughout world history to then read. So in that way, he does tell people.
He's just letting you know. Just so you know, I was kind of upset about this.
It was a little bit troubling. And it makes sense when he saw the things that he saw. So we'll look at that tomorrow. We do have a Tesla petition, folks. Make sure to sign it. Pray for Elon Musk. Pray for the Tesla executive team that they would turn from the things that they've been allowing to happen in their company regarding the abortion agenda, the trans agenda. We want to get as many signatures on this as possible. We've done great. Over 400 people have signed this. I'd love to hit 1,000 by the end of this week. I think that's an achievable goal. So share it, sign it. If you haven't signed it yet, folks, go do it right now on financialissues.org. Click the pop-up when it shows up on your screen. It'll take you right to the petition. You can sign it there. And I'll put it in the chat one more time as well. All right, Sam, let's look at some of that optimism here. So Scott Bessent still feeling optimistic about rate cuts. What can you tell us about this?
Bessent is kind of the market whisperer, right? When everyone's freaking out, Bessent's saying, no, it's going to be fine. Trust me, man. So, I mean, he's got that great smile and the perfectly coiffed hair. So it certainly helps. But yes, he is feeling optimistic, extremely optimistic, in fact, about interest rate cuts. Maybe he's going to dial that back a little bit in light of today's data. But still, this came from yesterday during an interview where he said that to Bloomberg that there's a good chance of a 50 basis point cut this September, which is much more aggressive than people had been talking about. So here he is talking about that on Bloomberg.
I do think we could go into a series of rate cuts here, starting with a 50 basis point rate cut in September.
A 50 basis rate cut in September, does that signal that the economy, though, is not doing well?
That signals that there's an adjustment and the rates are too constrictive. If you look at any model, that we should probably be 150, 175 basis points lower.
So, as I said, it's quite aggressive. He says this is needed to make up for the Fed's general sluggish response, the classic too late Powell, which he said has been made all the worse by inaccurate jobs data. So how this currently works, Trump fired the head of the Bureau of Labor Statistics. One of the reasons is the jobs data has just been so bad because it's collected through what is basically a glorified survey monkey survey that's sent to businesses every month, and the response rate has just been dropping off in recent years. And because of that, the government officials have to fill in the gaps and make up their own decisions of what this actually means. And of course, when you're just making things up, when the real data comes in, you have to make major retractions. Bessent, however, is confident that Trump's newly appointed head of labor statistics, a guy by the name of E.J. Antoni, will bring the data collection process into the 21st century. Here's Bessent again.
I was there when E.J. was interviewed, and he is incredibly qualified. And I think the most important thing here is that we get back to the integrity of the numbers, because it just became okay, just like so many things in our government, for it to get sloppy. So, I just think like this idea that we're accepting this mediocrity in government, why don't we bring things into the 21st century? Why don't we bring it into the digital age? Because, I don't know about political bias one way or the other, but what I can tell you is that the sample response size kept getting smaller and smaller, and then they filled in the cells. And anytime you get judgment versus data, then things become qualitative and not quantitative. And I think EJ is going to do a great job of bringing back quantitative standards.
So there you go, Seth. What are your thoughts?
So. Yeah, I sure hope so, Sam. I hope that Scott Bessent is right. And, here's something I'm wondering, Sam. Just workshop with this with me for a second. I think Scott Bessent is optimistic, but I do wonder if this is as much pure optimism as it is a subliminal message to Jerome Powell that it is time for you to cut rates now, buddy. You better do it. And even I would say this morning's PPI numbers does not change that. It might, maybe if you ask Bessent today, maybe he'll say a 25 basis point rate cut instead of a 50, but I still think that he's going to be confident with it. Sam, we had mentioned earlier in the show yesterday, this according to yesterday, there was a 94% chance of a rate cut in September from the Fed watchers. I do wonder what that number will be after the PPI, but I can't imagine that it won't be still optimistic because I don't really think Powell has any other option before him. I really don't. It seems like it could be career suicide otherwise.
That's right. And there's change-ups on the Fed right now. We had a governor recently resign, so Trump gets to put a new pick in there who obviously is going to be pro-rate cuts. I don't know if they're going to be able to get him in by the time that they make this decision, but still, the amount of people on Powell's side is shrinking.
Yeah, absolutely. All that to say, folks, this does have a lot to do with the partner commentary that's out this week. It is a great commentary. I can't encourage it to you enough. Go ahead and read it today. You can get it very easily. Just go to the partner side of the website, your little partners hub there, and click on the commentary button. It'll take you to the one from this week is at the very top. There's past commentaries down there as well. If you want Shanna's commentary and you're not a partner, folks, become one today. Financialissues.org. So easy to do. I'd encourage you to do that right now. Speaking of partners, Sam, we did get a question that came in here. Why don't we tackle this one from Jason?
Yeah, this is awesome. This is Jason. He's 43 years old. He said, "Hi, team. I follow this ministry and been a partner since Dan was on the radio. I have a portfolio that's grown quite a bit." That's kind of an understatement, as you're going to see. And he says, "And I was wondering if it's time to sell a few stocks that are up significantly. 2 are over 200%. 1 is over 600%. And Seth, 1 is over 1,000%. He said, "I've not made any changes in a few years and didn't even know they'd grown so much." So good for you, Jason, for not being a hawk about this stuff and just letting things go the way they're going to go. But he does want to know what he should do now. He says, "Thank you for any guidance you can offer, and God bless."
Well, Jason, that's great, man. You've done really well, and that is absolutely awesome. My answer I'd give you is look at your asset allocation and see if there's any rebalancing that you can do, because I cannot think of any world, Sam, any existence that you're still in balance with 1,000%, 600%.
Unless literally all your other stocks are also growing 1,000% as well.
Absolutely. With that much growth, I'm sure there's some rebalancing that needs to happen. So again, I'm just assuming that I need to get eyes on your portfolio to actually see if that's true, but I'm guessing that's probably the case. So be a great opportunity.
And to be clear, with rebalancing, that's not just your pie chart, which can maybe be in balance. I doubt it is, but let's say it is. You also want to look up how much each individual stock is taking up the percentage of those allocations. So if you do have the one that's over 1,000% is now making up 25% of your portfolio, that might be a time to cut back as well, even if your overall sectors are still in balance somehow. I doubt that's true, though.
Absolutely. So, Jason, I think that's awesome, man. And I would tell you, look at Shanna's commentary from last week as well. I think last week's commentary, so that was the one that was posted on August 7th, I believe. That will give you some good guidance also. And if you've read the commentary, you know exactly what I'm talking about. It'll give you some good guidance on kind of what to do if you are taking those profits and where to park some of that money. So I would encourage you there, Jason. One more thing to say about this, Sam. I think it's so cool to see that much growth. Jason, you've done a great job. And to just remember, folks, also that, this is part of that goal, is you want to be able to make that money and then make it work for you to make more money. So, Jason, you have won. You've done a great job. Keep it up. That's really awesome. Really awesome. Good stuff. Sam, let's take a peek here. I think we got time for one more. We got a chat comment earlier this week. So on Monday, we talked about student loans. And Felix, I do apologize because you had asked about this on Tuesday. We didn't have time to get to it yesterday. But Felix had kind of a comment in response to what we were talking about, Sam. You want to go ahead and read Felix's?
Yeah, Felix says this is just something to think about. He says there aren't any good stats on this, but I have a suspicion that many of the student loans are for trade schools that were not completed or they weren't able to get into the field they went to for school. It may be a smaller loan, but those individuals are now trying to get ahead and maybe making minimum wage so that $10,000 or $20,000 is more like $100,000 to a college student. They advertise to these kinds of people. These students should still pay the loans, of course, but it's something to think about.
It is something to think about, Felix. I do appreciate you sharing that. Sam, you had done some research on just some of the stats here. Can you read some of these for us as to...
Yeah, I I get what he's saying, and in theory it makes sense. I just don't think that the math would add up, because the share of student loan debt held by trade school attendees is astronomically small compared to actual four-year college. It's likely well under 10% of the national total. By the way, also the dropout rate among trade schools is also much smaller than the traditional four-year colleges as well, and the debt rate is also just smaller in general.
Yeah. So it really is, it seems to me, Felix, it's just different beasts there when we are talking about this. The general rule that I think we can come out of this is to say that going to a traditional four-year institution, or for many of you, you might be considering for your children or grandchildren what they're doing, going to that is going to cost more than it would be to go to a trade school, and who knows about the opportunities for jobs coming out of it as well, especially if you get like a philosophy degree or even a history degree versus if you get your mechanic's license, if you get your electrician's license, the job possibilities there. Folks, I think the point here is when you got to be very mindful about debt, about school. For most kids, what is the purpose of college? The purpose of college is to be able to get the accreditation to get a job. So the end goal is the same. Why not teach kids to do that without necessarily needing to pay $60,000 a year and go into debt to go into some perhaps really nice institution, but also an institution that might be teaching them things that are contrary to the biblical worldview. Just something to consider. Maybe we'll talk more about that on the other side. Felix, I appreciate you bringing that up here. You have to leave us, folks. Hope you have a great day. Mark Minnella is going to join us in the next segment for more financial issues.
In the last 10 to 15 years being in ministry, being married, something that has been constant in our lives is Samaritan Ministries. As we've moved, we've had babies, we've had different things come up, we have just been able to rely on Samaritan in ways that we never really even thought about before becoming members.
Our heart's desire is to plant roots and be in a place for a really long time. It's how we were raised. We see the benefits of that, but we also see the open-handedness of being used by the Lord wherever He calls. Because we just assumed when we started pursuing church planting, the quickest way to get from point A to point B is a straight line. And with the Lord, sometimes you find out it looks a lot more like this. And yet, Samaritan was with us through the entire thing.
We didn't have to look into, we have to change insurances now because we've moved states or whatever the case may be. And it's just been a real blessing to us in different phases of life.
I'm Kyle.
I'm Colleen.
We're the Gen X.
And we're Samaritan members.
If you're like me and used to think managing your investments was overwhelming or just for the experts, think again. I used to believe I needed a financial analyst to handle everything, but financial issues showed me I could manage my own investments while staying true to my faith. It's completely transformed how I handle my finances. What felt like a foreign language is now simple. I can buy and sell stocks with confidence, knowing my investments align with my faith. And the best part, this empowering, life-changing guidance is affordable. Just $132 a year. FISM gave me the tools to restructure my portfolio, diversify, and track my investments, all in a God-honoring way. Their video library taught me how to steward what God has entrusted to me with wisdom. If you're ready to gain financial peace and manage your investments with purpose, I can't recommend Financial Issues enough. It's something anyone can do.
To learn more, go to financialissues.org.
I found out I was pregnant when I was 21 years old. For me, I was scared, I was shaking. I Googled places to abort. We drive there, and as soon as we get there, I open the door, and the first thing that I see is a bunch of Bible verses in the walls. They gave me a little counseling session, they gave me the pregnancy test again, and they do an ultrasound. And that's when everything changed. When I saw my baby, and when I heard her heartbeat, that was it. We decided with my boyfriend at the time, which is now my husband, to continue the pregnancy together. We started coming to the classes, doing our homework, getting counseling together. We've seen the hand of God ever since we stepped into the pregnancy center.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
All right, folks, we're back. Financial Issues. Sorry we weren't able to get our bumper music in here, but we are live, and it's wonderful to be here with you today.
Seth, you should pull out your guitar. You're a wonderful musician.
I should have provided my own bumper music, right? Exactly. And you know what? We have an extra voice on the program you're hearing right now. Mark Minnella is back with us. Mark, we have extra seconds to play with now because we didn't have a bumper music. So that's great.
Well, that's wonderful. Thanks.
Awesome. That's awesome. Hey, real quickly here, folks. The market's just opened up. The Dow Jones is down about 0.2%. The S&P 500 is down about 1/3, and same with the Nasdaq as well, off of that wholesale inflation number being a little hotter than what was expected there. Folks, I hope that what Sam and I said in that last segment made sense for you. Felix, I really do appreciate you bringing up that comment onto the chat. I think what we were trying to convey Monday and what we'd stand by is to minimize as much debt as possible and maximize as much employment opportunity as possible. And it just seems common sense would tell me that if you learn how to work a job instead of going to a 4-year institution, which might provide some of those skills, but might provide some things you don't really need as well, it's just better to get there as quickly as you can. Sam, we have one of our commercials, if you watch our TV feed, is a Samaritan Ministries commercial, and there's a pastor in there who says the quickest way from point A to point B is a straight line. And it's kind of that same idea there.
Who would have thought?
Yeah, common sense. But I digress. Mark, great to have you back, brother. We're excited.
Glad to be here.
Yep. So last time we had you on, Mark, we explored some of the common objections to biblically responsible investing. And last week we got an interesting question that Sam and I had a chance to address from one of our listeners. But I'd love to tee it up for you, brother, and hear your thoughts on this. So the question is basically this: with so many different opinions from some of the big players in the BRI space, they throw out names like Inspire, Evaluator, even FISM, and others. Should we just make up our own BRI standards? What do you think?
Well, unfortunately, that's one of the biggest problems with believers is we make up our own biblical verses. We make up our own, what we believe the Bible says as opposed to what it really says. The whole idea of biblical responsible investing, the reason we termed that phrase, the reason Dan Hart and others of us way back when came up with that phrase was because all the others fell way short. Who was making the decision? Who was determining the direction? Who was guiding us? Well, if it's just faith, what faith? Whose faith? I know my faith is though I may have enough faith to get into heaven, I still stumble every day. So everybody's
Mark,
faith
sorry,
is low.
just to jump in there, when you say that, that's in reference to within the Christian community, the idea of Christian investing, that there were other investing ideas within the Christian community that weren't cutting it. Is that right?
Right.
Yeah.
Well,
okay.
that is true, and there still is. That's the issue. Is there's some major players in the Christian investment community that their screening is not clean. But the point being is that biblical responsible investing uses the Bible to determine what to screen for. So any screening service that falls outside of those tenets of honoring God and not offending Him, those have to be questioned and be concerned about. Now, the two major screening services right now, Evaluator Service, which is the oldest, and the strictest, is what I subscribe to, is what I really believe in. The others have over time maybe gotten a little better, but have had issues in the past with being inconsistent and conflict of interest with their own funds and things like that. So we got to be very careful. First of all, look at a screening service and say, we can't make up our own screens, because how would you screen it? I know I spent days upon days every month trying to get corporations to answer questions to help me do. I know we have the internet, we have Chat GPT now. It makes it a lot easier, but it's still, you're not going to know for sure. By using something like Evaluator, you do. You're getting the strictest and the most compliant. I know these people there, they love the Lord. They would never conflict themselves with what the Bible says. They want it to be as perfect as humanly possible. So when you say make up your own screens, I don't have any problems with that, But do you know what it's going to take to do that? You're going to have to become a full-time analyst and be out there all the time downloading. It's 40 to 60,000, maybe even 100,000 now, just to download the information you need for all the mutual funds and everything, to be able to screen them to get their quarterly downloads or their now weekly downloads. It's outrageously expensive. So you can make up your own and do the best you can with it, and God bless you if that's the way you want to go. But there are screening systems available, Evaluator being number one, and they have their free service, which is, what is it? It's a Check It. I can't remember what the name of the free system, but Evaluator service. You can get to it on financial issues. You go straight to it on financial issues.
Let me just point that out here, Mark, in case people are wondering. Folks, financialissues.org resources tab. You go to the resources tab, go down to the Evaluator button. You click on that, and you can follow that prompt, and you can do exactly what you're talking about, Mark. No, it's great.
For no cost.
By the way, Mark, it's technically called the Screen It, Clean It
Clean It.
Yep.
That's what it is. Screen It, Clean It. Yeah,
yep.
Thank you. Yeah. Or you could subscribe if you wanted to, which is not very expensive really for somebody who's managing portfolios or who has a large enough portfolio themselves. You could get into deeper screening that way. So do I think it's okay to screen it yourself? You know what? After I use Evaluator, after I do some other things, I do research on my own as well. I add things to Evaluator. I don't take away. If Evaluator says this is dirty, it's dirty. I sometimes might call them and say, hey, I don't understand this, and they'll explain it to me. So you have tools at your service that the Lord has raised up godly people to run, so use them. That's my advice.
Mark, I'm so glad that you said that, because you had mentioned earlier mutual funds. There are a lot of companies in mutual funds, and it is, I'll tell you this, as a husband, a father of three with a full-time job, doing this, trying to serve my church, doing other things like that, I just might not have the time to do all the screening on my own. I just don't. And certainly there are people who are a lot smarter than me who are doing this screening for me, like you mentioned, at Evaluator. Can you speak to that, Mark, about the convenience that we have with screening tools like this to be able to take some of the weight off our shoulders?
Absolutely. Last night, here's a perfect example. Last night, I'm thinking about artificial intelligence and whatnot, and I'm like, you know what's really going to make a lot of money? This was my thought. There's a possibility of great gains in small cap and micro cap artificial intelligence. There's a lot of risk in it, but there's a lot of potential there. I want to get a list of 20 small cap artificial intelligence companies with good PE, normal PEs with that are expanding their market, that, just all the basics, not a lot of debt, that kind of thing. And I got this list, and then I went over to Evaluator, typed them in, and it gave me a full screening of each one. Luckily, they were all clean, which is really cool. Because now I got this great list that I'm going to be working on here shortly. But on top of that, I could go into each one and see if it did have a problem, go into each one, click on it, and go into each one and see where they were offending God, where they were compromising biblical integrity. And that is just so cool. So it took me all of 5 minutes to evaluate 20 stocks because of Evaluator services.
Yeah, excellent.
And it could have done 100 stocks in that time.
Yeah. That's
where it would have taken me going out to all the sites, looking at everything, going out to all the ugly sites, because part of the way Evaluator does this is they have people that actually go out to all the enemy sites and look at who's supporting them and stuff like that as well, along with other ways. So Mark, they do it for you. That's just like FISM does it for you as far as all the investing and making sure everything that's here is clean.
Absolutely.
That's the easiest way.
Absolutely. Mark, what I'd like to do now is let's switch gears for just a moment here. We're coming to the end of this segment, so maybe kind of as a sort of a bow to this conversation here, speak to the idea of using the wisdom that God has given to us appropriately with these tools that we have, because this is a do-it-yourself strategy, but we do have these tools here that are available. How do we mesh those things together?
That's a wide question. Yeah, there's a lot of great tools on your site, which is really important. Not only whether it's clean or not, but there's tools there to help you understand asset allocation or reducing volatility risk by allocating across multiple sectors, and by within those sectors finding those stocks that are made of strong steel, that have all the great metrics to them. So by having all those, you can pull it together and then start making decisions on that. I think utilization of your time is one of the things we need to work on the most as Christian investors. The one person wants to do it themselves. I've always said you can do it yourself if you got enough time and money to do that. But if somebody else is doing it for you and you can trust them because they have a history and they know what they're doing and they've proven it, why not use that information, especially since it's cost almost nothing, maybe $10 a month, $11 a month, that's nothing, to get all that kind of information. But then you need to pull all that back into who you are, where you're at, and how you got there, because any investment portfolio is only good if it enhances the positive aspects of what you believe the path God has you on.
It's awesome.
If it doesn't match that, you're in the wrong portfolio.
Yeah. Mark, that's so well said, brother. I appreciate that a lot. Folks, we're coming up to a break here. It's going to be a hard break here, so don't be surprised. But on the other side of this, Mark, we'll talk a little bit more. We'll switch gears and look at kind of what's going on in the markets and in the economy. So I'm looking forward to hear your expertise on that. We'll also do a little chat rundown for you, folks. Make sure to say hello if you're in the chat today. We got more financial.
It's up to us to stand up and say, enough is enough. All of this unbiblical stuff that's going on, whether it's abortion or transsexual or LGBTQ, widespread pornography, human trafficking, bottom line, it's still up to us. If we stop investing in these corporations that are trying to destroy us, sooner or later, they're going to wake up.
To learn more about biblically responsible mutual funds and ETFs, go to timothyplan.com.
If a woman sees her baby on ultrasound, it doubles the likelihood that she'll choose life. On top of that, we share the gospel of Jesus Christ with her. This is why you should support preborn.
Then they sat me down. If you were to die today, do you think you would go to heaven? And I was like, no. Keeping the child was my first stepping stone. And ever since then, God has cleaned me up from the inside out.
Help support women in need. Go to preborn.com/FISM.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Great to have you here today, folks. Before we get back with Mark here, just wanted to give a little shout outs on the chat this morning. John from Alabama saying FISM, greatest value for your money. John, appreciate that so much, brother. And I would agree with you. It is a great, great value. $132 a year. You get access to everything we offer. Pretty cool, man. Glad that you're enjoying it. Eddie, good to see you this morning. Eddie agrees. George from North Carolina saying, unfortunately, quite a few kids are going to college and coming out with a, quote, underwater basket weaving degree. That's true, George. And they picked the highest cost college that they could, hoping the prestige would carry them. George, it's not not just the underwater basket weaving degree. How about the International Women's Studies degree or one of those other degrees like that might not land you a job very well? So interesting there.
But if the local rec club is doing underwater basket weaving, that could be fun. You might want to do that on your Saturdays.
Do that as a hobby. Exactly right. Several of you have given some wonderfully kind comments about my guitar playing skills. So thank you, George, for that, as well as Lisa saying, Sir Sirth has it going on. I appreciate that. I do enjoy playing guitar. I will not do it on the show, though, because that's not the time and place for it. However, if we lose the bumper music again, maybe we'll have to bring out the guitar. So maybe we'll do that. But yeah, great to see you guys. Nathan, good to see you. Daryl. We've got the other George, Big and Little George, both on the chat this morning. Stephen from Oklahoma. Good to see you there, Stephen. Anyone else, if I'm missing you, Brian, I think, is there this morning. Say hello. Dave and Darlene, you guys are there as well. Good to see you all this morning. Make sure you say hello on the chat. All right, Mark, let's switch gears here for just a moment. So you're a financial expert. You got decades in the business. Tell me, what do you make of Trump's tariffs and all the hullabaloo surrounding it? That's a kind of, I know it's a 30,000-foot question, but what do you make of all this?
The question itself reflects the issue itself. Everybody's focusing on these tariffs in and of themselves and not in the big wake of the ocean of economics, because there's so many things that play in on this. Everybody said, well, it's going to cause hyperinflation, or it's going to cause inflation, more inflation, blah, 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 blah. Yeah, we've seen it hasn't been true, but it has been. It just has been muted a bit by other parts of the economy. We see that fuel prices have gone down. That helped. We see that interest rates haven't gone down, and that kind of helped actually with maintaining the lack of money supply or the constriction of money supply, so that inflation did not start coming back up. I'm not giving Powell any kudos. I don't think he did it for that reason, because he has all the indicators. He sees all the levers. He knows how they all work, and he should be on top of that. So the whole idea of what Trump is doing is bigger than is being reported. If you really think about it, he's reestablishing the United States in the world. And he's doing so, getting rid of all these deals that all these people made gobs of money off of in the United States, making the deals, not how the deals came out, and giving away all these different things and making friends and internationally and helping to propel the one world order and all that kind of garbage that goes on that we never really hear the depth about. So Trump is in there, and he's very seriously reorganizing everything to drain the swamp, to cut off all the funding of the international attack on the United States, to bring the United States down economically. And he has to do these things. Part of that is renegotiating all the trade deals so that it works for the United States to be productive and not dependent on the world. Now, there's a thing called a J-curve. Anybody who's done any economics or any mathematics understands this grafting. And what it means is when something starts happening, you don't see the effects on it. Let's just say the economy's headed down. And you don't see the effects of it at first, but over a little bit of time, it starts kicking in, and then it takes off. And that's what I think we're going to see with everything, not just the tariffs that are going on, because we have to look at this and say these tariffs are one of many things. Yes, we have interest rates, we have the dollar. Nobody's talking about the dollar anymore and the strength of it. Throughout most of my adult life, the idea was to keep the dollar weak so that we could help emerging markets be strong. Well, I'm sorry, but the world right now, how many real emerging markets are there? China's still considered an emerging market? I don't think so. It is, though. Well, we don't want to keep them strong. We want to keep the U.S. strong so we can help the rest of the world. So we got to look at how the dollar is doing. We got to look at our debt. We got to look at so many different things and start tweaking those a little at a time. It's like using a 31-band EQ to set up the room. You move this frequency a little bit, but this frequency starts down. And you got to keep playing playing with them till you get it all right. And that's what's happening right now. Don't look at the tariffs in and of themselves. Think of it as part of the big, beautiful plan to realign America to be great again. And I'm not trying to promote anything but the truth right now.
Yeah.
You know, I love what Trump has done. I hate the way he has done it. I really believe the Bible teaches us to be more respectful and honorable. And I wish he would be a little more of that. But you know what? Sometimes when somebody's thumping your chest or starting to take a swing, it's not time to be diplomatic or respectful. It's time to knock the guy out. You know?
It's well said, brother. No, it really is. You know, in the aftermath of Trump's election, before he took office, Sam, I think you'll remember this, we talked a lot about how, listen, there's going to be a cleanup period, and it might look ugly. There were, I mean, the Biden administration left a mess, and someone had to clean it up, and Trump's cleaning it up right now. And I actually think the timetable has been pretty darn good when you consider that it's only been 8 months, and we got all these deals coming in, we got all these things happening, the border's getting cleaned up. That's pretty good. You know?
There's so much going on and happening so fast. And quite frankly, I am amazed at how stable everything is during this period of time.
Yeah.
Our government right now, the Trump administration is doing incredible things and keeping the balance there. And a lot of this, you know, there's so many different things we got to think about. One is we talk about inflation all the time. I don't think most people really understand inflation. Just this week, I got asked a question. I was asked, well, if Trump's got inflation down, how come prices are still up? Well, decreasing inflation does not mean decreasing prices. It just means the rate at which prices increase slows down. Those prices were raised up during the Biden administration. The only way to get them down is to go into deflation, not inflation. And if you look at the levers that need to be pulled to stabilize an economy on that, you really don't want that right now. I'm not saying it wouldn't help over the long run, but right now it would be much easier to let incomes increase over time to catch up with the inflation damage done under the Bidens. Very important. Understanding inflation, understanding the strength of the dollar, understanding investment returns both in the U.S. and internationally is very important, and the effect all those have on them, including the trade and the tariffs. All those things playing in. We're going to go through a cleanup period. It's just like cleaning out the garage when you're doing it. What a mess it is on the drive, on the garage, everywhere. But when you're done, that's nice.
Feels nice. Absolutely. And even a mess on yourself as well, getting spider webs, cobwebs in your hair. That's what's happening, brother. Hey, Mark, we probably only have time for one more question here, so I'm gonna give you a little doozy here to finish our show.
I'll try and keep it short.
That's all good, brother. What does the Federal Reserve actually need to do to serve the American people well? I would love to live in a world where there is no Federal Reserve, but what are your thoughts?
Well, you know, I said I'm going to keep it short. Oh, my God. Again, the Federal Reserve is something almost nobody really understands why it was started. You know, originally it was started just to give elasticity to the dollar so that in bad times it could back up the banks and stuff like that. Right now, I don't know who knows what the Fed is doing or why, and what the power they have now. What do they have? They have trillions and trillions of dollars on their books. It's like, how did they get all that money? They just made it up. You know, by selling out. You know, I would say that we need to get our debt down in the United States is the most important thing. And part of being able to do that is the Federal Reserve to work with the administration to help bring interest rates down so we can issue lower debt. Now, that may cause a little inflation at first, but it will help us get our debt down. And as our debt comes down, we'll have a safer, stronger dollar, which as we get a stronger dollar, that increases our returns in the international investment. It increases exports. You know, it increases it just helps us do everything right. Mark, and it cheapens our imports. Yep. It offsets those tariffs with a stronger dollar.
Well said, brother. Looks like we're coming to the end here, Mark. But man, I appreciate you joining so much, brother, and hearing your expertise. It's
honored.
Always a joy to get to have you, man. And I look forward to the next time. Folks, again, that's Mark Minnella. Great to have Mark. Great to have all of you there as well. A couple more of you joining here in the chat. Claude, it's good to see you, brother. I hope that the aftermath of your move has gone well. I got Maritza up early as well. Maritza's from Oregon, and it's almost 7 o'clock now over there, but you're up early. Great to have you this morning, Maritza. Quickly here, folks, before we sign off, the markets trending up towards the flat line from where they started. The Dow Jones is now trading right around 0.3%, S&P 500 at a fifth, and the NASDAQ is just below the flat line. So we'll see what comes of the rest of the day here. All great things here on Financial Issues. Hey, folks, I do want you to remember, listen, everything you have belongs to the Lord. Let's be encouraged as well as we see the cultural tide turning. We also see the kingdom of God moving and advancing. I want to be a part of that, and I'm sure you do as well, folks. So let's do that here with the investor dollars that God has entrusted to us. I hope that you were encouraged by today's show. I hope you'll join us tomorrow with Shanna back on Bible study in the morning. It's going to be a good day. Until then, remember, it's all His. Let's be found good and faithful stewards with what God has given to us. God bless you all.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.